Hi, I'm Dave, and today I'd like to talk about asset allocation. So when you make investments, you have a choice across different investments, usually stocks and bonds. And when they talk about a 90-10 or 60-40 or other portfolios, they're talking about the mix between stocks and bonds. And your asset allocation is actually the number one determinant of how your portfolio performs over the long time. So without any further ado, here's a screenshot of information on how asset allocation is shifted over time. So if you look at the chart from Visual Capitalist, essentially the annual returns between 1926 and 2019, at the top is 100% bonds, and at the bottom is 100% stocks. And what they're saying is during this time frame, 1926 to 2019, the average return for 100% in bonds was 5%. And assuming inflation is 3 to 4%, you're still making money, just not necessarily a lot. And that difference makes a bigger difference over time. So the longer your time horizon, the more risk that you want to take. And that generally means investing more in stocks. And if you look at the portfolio at the bottom, 100% stocks, essentially it can have a really bad year. So 40%, you can lose 40% of your investment on paper in 1 year if you're 100% in stocks. But the average performance is about 10%. I mean, so that's double of just 100% and essentially in bonds. And in the best years, you can make over 50%. So what people typically say is to have a 60-40 portfolio. That minimizes the downside risk here to about 26%, and the average is about 8%. So often people say to estimate your returns between 6 to 8%, and that's based on historical returns of stocks and bonds in a 60-40 portfolio. Again, this information is only from 2019, and historically bonds have been considered a lower risk investment. However, in 2022, bonds lost 39.2%, which is essentially the same as 90% in bonds as a worst year. I mean, so the information isn't, completely accurate that bonds are safer, and that essentially came about because interest rates increased from historically low levels. So going forward, even though that they lost 39% in 2022, this information is kind of an aberration. But just because you're investing in bonds doesn't mean it is without risk. One is you're going to not make as much money over time because of inflation is going to erode the actual return that you receive. And the other is that bonds aren't necessarily as safe as people think. So if the younger you are, the more risk you want to take, which means investing in stocks. And if you lose money on paper, leave it in the market because essentially it will bounce back and you'll have time to do that. As you get older and get closer to essentially wanting the money, what you'll want to do is essentially invest more of a split portfolio between stocks and bonds based on your risk tolerance. Something to consider is if you have a pension, it is essentially a bond. So you'll want to count the amount of your pension as amount of a bond in your investment portfolio. We can talk about that another time. But asset allocation is really important. And over the long term, if you have that time on your side, investing more in stocks is to your benefit.